Hi there, you're watching Market Cafe on ET now with me, Shreyanti Singh, and over the next 1 hour, I'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should keep on your radar and tell you what the brokerages are saying as well. But first things first, let's take a look at what Wall Street did then. And when you take a look at what really happened, let's first take a look at US stock futures because they were flat on Monday night after the S&P 500 as well as the Nasdaq Composite notched their longest winning streaks of this year. Now, when you take a look at Dow Jones futures, you're looking at a downtick coming in of about just 15 points. Futures tied to the S&P 500 flickered near the flat line. When you take a look at Nasdaq 100 futures as well, you're looking at marginal gains coming in there as well. And after hours trading, you did have cyber security company Palo Alto Networks that added 2% after posting top and bottom line beats for the fiscal fourth quarter. Now, guidance for the adjusted earnings in the current quarter also came in ahead of us estimates, so that was also something that was important to note. Now, the action, of course, follows another winning day for the major averages. Like I mentioned earlier, the S&P 500 advanced nearly 1%. When you take a look at Nasdaq as well, you're looking at gains coming in of about 1.4%. There as well, in fact, both indexes posted their 8th straight positive session. So that's where it is in terms of the trend line, and of course for the S&P 500 since November 2023. So an important milestone coming in there as well. It was the longest winning stretch for the Nasdaq since December 2023 as well. The major averages, of course, have bounced back amid a dramatic fall in the market volatility from the start of the month. So that's the kind of moves that we've seen in August. Now the CBOE volatility index is now at 14.7 after topping 65 on August 5th. Now that was the day that the S&P 500 posted its worst session since 2022 amid a global market sell-off. So that was the kind of setting that you saw for the CBOE volatility index, and that is where it's currently at. Now, in terms of strong retail sales data and a soft inflation report, those were the factors that really helped soothe investors' fears on the economy as well. Now, this week, investors are, of course, readying themselves for that all-important Federal Reserve's annual Jackson Hole Economic Symposium as well. And that is where Chair Jerome Powell is scheduled to give remarks. And that is also something that the market is keeping a very close eye on, and the Wall Street is also looking for hints specifically of what to expect at the Fed September meeting. So that really is what is in the spotlight. Now, in the way of earnings, investors will of course be watching out for second quarter results for home improvement retailer Layoffs as well. Let's also take a look at what European indices did. Now, European stocks closed higher, extending that positive momentum that we saw earlier, in fact. So when you take a look at whether you take a look at DAX, whether you take a look at the Pan-European Stock 600, you're looking at gains coming in for both of these. So that was an important move coming in there as well. Let's also take a quick look at what US crude oil did though, because that is where all the action was at, because you did have US crude oil futures that fell nearly 3% to close below that important $75 per barrel level as the US pushes to secure a ceasefire deal to end the fighting in Gaza, as well as worries about softening demand also weighed on the market. So that is something that we've seen as a trend that has been emerging in the oil market, and we saw an extension of that trend. And we saw those losses as well deepen. So let's take a look at price movements then. When you take a look at WTI, downtick of about 3%, like I mentioned, is what you saw. And it was around those $74 per barrel levels, well below that $75 per barrel level. And when you take a look at the contract year to date, though, that has gained 3.8%. Let's also take a quick look at Brent as well, because Brent also saw a downtick of about 2.5% coming in. So that was around $77 per barrel as well, and year to date that contract is also ahead about 0.8% thereabout. Now, US crude oil, of course, has been trading in the range between $75 and $80 per barrel over the past week, and the market has really been caught between the geopolitical tensions in the Middle East that could hurt supplies and push prices higher, and on the other side you do have a supply and demand fundamentals that are leading the other way as well. So that largely is the setup that we see emerging for oil prices. Let's also take a quick look at gold then, because gold dipped after that record run that we saw earlier. So when you take a look at gold prices, rather subdued, downtick of about 0.2% coming in, and we did see profit booking after gold prices hit that $2,500 per ounce ceiling that we saw in the previous session as well. Let's also take a quick look at the events that you should keep on your radar, and there's a lot of them. Now from the Eurozone, you do have the CPI data, and in terms of corporate action back home, of course, you do have the board of Sansera Engineering that will be mulling fundraise, so that counter will remain in focus. Is the record date for AIA Engineering as well. In terms of the share buybacks, so keep an eye on that counter as well, and also keep Hindustan Zinc also on your radar, because the board will be mulling a dividend, so that one will remain in focus. And in terms of dividend, it's the last day to buy a host of shares to be eligible for dividend. So the likes of AI Engineering, Balkrishna Industries, IRB Infra, or even a Dr. Lal Pathlabs, Phoenix Mills, Sun TV, as well as PI Industries. So those are the counters that you should be keeping an eye on. And in terms of other events, there's a host of events, like I mentioned, that you should keep on your radar. Now, Atlanta Fed President Rafal Bostic will be speaking. That speech will remain in focus. And in fact, this week is the week that commentary coming in from the Fed will remain in the spotlight as well, like I mentioned earlier. And you also do have the Kolkata rape murder case suo motu hearing in the Supreme Court, and that will be something that the entire country will be looking out for in terms of what commentary comes out from the Supreme Court as well. India and Japan will be holding 2+2 ministerial dialogue as well. So lastly, that will also remain in the spotlight. So that was what you should be watching out for. But let's take a look at the stories for the day. And Minneapolis Fed President Neel Kashkari says it will be appropriate to discuss cutting US interest rates in September because of the rising possibility of a weakening labor market. In addition, he also alludes to a shift in the balance of risks, which strengthens the case policy easing starting September. Now, Kashkari's comments come after St. Louis Fed President Alberto Muslim as well as Atlanta Fed President Rafal Bostic made remarks that gravitated toward an interest rate cut next month. However, he does not see reason to lower rates in increments of larger than a quarter percentage point because layoffs remained low and claims for unemployment benefits did not suggest a notable deterioration. So that's commentary coming in from the Fed. Moving on then, meanwhile, the European Central Bank may need to lower rates again in September, and that's the word coming in from the Finnish Central Bank Chief Olli Rehn. Now, Olli Rehn also, remember, the ECB was among the first major central banks to cut interest rates back in June, however, held rates in July with no firm signals around what they might do in September. With more data coming in about prices as well as macro health, Rehn has become one of the first on the ECB's 26-member council to offer a view on the appropriate course ahead. So that's key commentary coming in from the ECB as well. Moving on then, General Motors is laying off more than 1,000 employees globally in their software as well as services division in a bid to streamline the unit's operations. Now, the layoffs, including roughly 600 jobs at their tech campus near Detroit as well. Impacted employees were notified Monday morning, and the layoffs will be representing about 1.3% of the company's global salaried workforce of 76,000 as of the end of last year. Now, the cuts come as automakers attempt to reduce costs and in many instances employee headcount amid fears of an industry downturn as well. So that's an important update coming in from General Motors. Moving on then, British entrepreneur Mike Lynch is reportedly missing after the sinking of a super yacht off the coast of Sicily. The yacht named Bajan was carrying 22 people, including British and Canadian nationals. Rescue forces were able to bring 15 of them out. The British tycoon and his 18-year-old daughter and the chief of the yacht are among the missing. So that's an important update coming in there. But with that, we're completely timed out on this segment. When we come back, we'll take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. And Asia Pacific markets largely climbed across the region, tracking Wall Street's rally as well as China released key economic data as well. China's loan prime rates were held at 3.35% for the 1-year LPR and 3.85% for the 5-year LPR as well, in line with the expectations. Currently, This is very much in line with the expectations that were being penciled in, and the 1-year LPR acts as the benchmark for most corporate loans, as well as the 5-year LPR serves as a reference rate for mortgages. So that's some background information there. Let's quickly take a look at Shanghai on your screens, downtick of about 0.4% coming in for that one. Let's also take a look at Hong Kong's Hang Seng Index. Now that one is in the green, but that has currently just spared some of those gains that we saw earlier in trade as well. Let's also take a look at Australia's ASX 200. That one was also in the green, climbed about 0.5% ahead of that RBA release. Currently, it's up about 0.3% on your screens. Now, investors will of course be assessing minutes from the Reserve Bank of Australia's August meeting. So that is key to watch. Another meeting on August 7th, the bank kept its benchmark interest rate at 4.35%, but also noted that inflation remains above the target and is also proving to be persistent. So that is the kind of commentary that we saw from the RBA, and it will be important to watch out for that announcement coming in from them as well. Now let's also take a look at Japan's Nikkei then. That one is firmly in the green, currently a deeper shade of green coming in for that one. 1.7% uptick coming in after that 1.1% gain that it opened near as well. Now let's also take a look at South Korea's Kospi. Now that one is also in the green. So it's a good day in trade coming in for all of the Asian indices. On your screens, you do have Kospi, uptick of about 0.8% coming in for that one as well. Now back home, we did shut shop around the 24,570 levels. And currently what we're sort of penciling in at this point is a good start is what we're looking at. So let's see how that really pans out for us in terms of that strong handover coming in both from Wall Street as well as the Asian indices. It'll be very important to watch out for how we perform in trade as well. Welcome back. Thank you so much for staying tuned in. Well, let's take a look at some more news and updates then. Demand dullness continues to mar sentiment in the PVC space. At least that's what channel checks are suggesting, and PVC prices have been cut by 3 rupees per kg, taking the current prices to 80 rupees per kg. In fact, my colleague Soumit Sarkar is standing by with more details. Soumit, tell us a little more about this.
Well, pipe manufacturers like Astral, Supreme Industries and Finolex Industries would remain in focus given the fact that PVC prices have been cut yet again, and this time the price cut has been around 3 rupees per kg, and the current prices stand around 80 rupees per kg. But do remember, since the start of July 2024, prices have been cut by nearly 14 rupees per kg, which is nearly 15% of the earlier prices. So what analysts are now indicating is that the price hikes that we had seen in the first quarter have now been completely reversed, and apart from this, industry experts are also highlighting that there could be a delay in implementation of the anti-dumping duty on PVC. Now do remember that nearly India's demand stands at close to 4 million metric tons of PVC on an annual basis, and nearly half of this is met by imports from countries like South Korea, Taiwan, Japan and China, and the anti-dumping duty implementation has been delayed, and this was supposed to be one of the key triggers for the industry. Now channel checks are also indicating that demand continued to remain weak in the month of July and has not picked up so far in the month of August. Now though Q2 is generally a weak quarter, the current demand is still below than what the street was expecting, and moreover going forward, given the fact that the global demand for PVC is also weak, prices could fall much more going forward as per analysts. Now because of this price volatility, analysts are indicating that there could be a delay in restocking done by distributors, which could lead to lower volumes for these pipe manufacturing companies like Astral, Finolex and Supreme Industries. Moreover, this sharp fall in prices that we have seen so far in the second quarter could also lead to inventory losses and could impact the margins of these companies. So keep an eye out for Supreme Industries, Astral and Finolex Industries in trade.
Absolutely, Soumit will definitely watch out for all of these stocks, especially when they open up for trade today on back of that price cut and what sort of a margin impact these companies will likely have going ahead. But moving on, the Reserve Bank of India has actually tightened the norms on peer-to-peer lendings for NBFCs, and in a bid to improve transparency as well as compliance. We've learned from our sources that some of the lenders have halted withdrawals and also investments under the purview of the new guidelines. Let me go across to my colleague Anurag Shah to exactly understand what does this mean and who are the likely candidates to be impacted by this. Anurag.
After RBI's guideline on P2P lending, few P2P lenders has stopped the early withdrawals as per our sources, and companies are in discussion with the RBI also on the recent new guidelines of P2P lending. As per the new guideline, there's all the transaction will be routed through a dedicated escrow account, and the early withdrawals which used to happen and the lender used to transfer one lender to another lender, which won't be allowed as per the new guidelines. So that has made P2P lenders to stop the early withdrawals for time being. There are few lenders which have stopped the early withdrawals, and they are in discussion with RBI. Remember, in last few years, the P2P lending has has grown up many folds because the spread in P2P lending used to be very high. Lender used to give a loan for the P2P lending at 9 to 10%. They used to get the interest, and then borrower through that platform used to get loan in 18 to 20%. So spread used to be very high. So in case of few default also, companies used to make money, but there were some violations RBI has noticed, and to have the more transparency in P2P lending, RBI has made some rules very strict, which will be in a form of a dedicated escrow account. So in the case of repayment also, the P2P lenders will face some sort of issues, because all repayments all be routed through the dedicated account. So previously for the repayment, any sort of repayment also, lenders used to give the money to the borrower, but that won't be possible after the new guidelines.
Thanks, Anurag, for that update coming in. In fact, we also caught up with R. Gandhi, the former RBI Deputy Governor, about this as well. Listen into what he had to say then.
The new lenders who will hereafter come forward, they will have to understand when they lend, the money is with the borrower until he repays. So that with that, when they are ready to wait for that much period, whatever pricing that they would want, and they would agree between the lender and borrower, then I don't see why there should be a cash flow problem. Everything depends upon clarity on both the sides of the borrower and lender. Once the terms are agreed on, this is what it is, then I don't think the lender will hesitate to lend just because he will not be able to redeem earlier than originally what he had planned for.
Right, and as RBI raises concerns over the rising credit deposit gap, Finance Minister has urged the public sector and regional rural banks to enhance their deposit growth. The Finance Minister also took stock of progress of government schemes announced in the budget. Let me go across to my colleague Prakash, who was tracking this sort of a meet very closely to understand exactly what was discussed in that meeting. Prakash, over to you.
Yeah, the Finance Minister had chaired two important meetings to review comprehensive performance of the public sector banks and RRBs. When it comes to public sector banks, 6 key parameters had been decided to review their financial and overall performance, and the most important was deposit growth. The Finance Minister has instructed public sector banks to come out with a different set of a strategy to increase deposit growth. In fact, PSBs have been told to carry out special drives to garner deposits. In addition to that, issues such as digital payments and cyber security have also been discussed by the Finance Minister during the meeting prominently. In addition to that, implementation of new credit products was also on the agenda for discussion. Along with that, the banks have also been instructed to implement a recent budget announcement. Flagship schemes such as PM Awas Yojana, PM Surya Ghar Yojana, PM Vishwakarma Yojana were also discussed by the Finance Minister in terms of credit growth. When it comes to financial performance of the public sector banks, it was noted that during financial year 2024, the PSBs performed well across all the financial parameters, with a net aggregate profit of rupees 1.4 lakh crore, which is highest ever. Along with that, the banks have also been informed to optimize the scope of resolution and recovery offered by NCLT and NARCL. Moving forward, the Finance Minister has also emphasized on a collaborative approach between banks, government, regulators and security agencies against cyber frauds. When it comes to performance review of the regional rural banks, which have been done based on 7 key parameters, and that include digitalization, resource mobilization, credit growth for agriculture and MSME sector, which was discussed prominently during the meeting.
All right, thanks Prakash for all of those important details coming in. That was definitely an important meeting that the market was looking at. Now moving on, let's get a little more stock specific then. And HCL Tech is going to be the one that will be in focus today because the company has appointed Shiv Walia as the new CFO of the company, replacing Prateek Agarwal. Anisha Jain is joining us on the phone line. Anisha, tell us a little more about this change of guard then.
Well, HCL Tech is in focus on account of the latest leadership churn. The current CFO, Mr. Prateek Agarwal, has decided to tender his resignation to pursue opportunities outside of HCL Tech. He is going to be in the company till the first week of September thereabouts, but post that he's looking at moving on. Interesting because Prateek has been with HCL Tech for over 12 years. He has been serving as the CFO since October 1st, 2018. And during his tenure, of course, those ups and downs of COVID, global uncertainty, etc. had come, and the company had managed to wade through all of that. So a bit of a disappointment. Having said that, he will continue till the first week of September, and post that, Mr. Shiv Walia takes over as the new CFO. Interesting elevation there because Shiv too has been a career HCL Tech person per se. He's been with the company for over 3 decades now. He joined in 1993, I'm told. He's looked at multiple functions, was in a senior leadership role in the finance vertical as well. So it was a very natural elevation of sorts, and he takes over as the CFO from September onwards itself. So, in comparison with other companies in the sector, HCL Tech had seen less number of exits, maybe a CHRO and maybe a few, internal shifts that happened, but not as much as we had seen in LTI, Mindtree or Infosys. So, maybe a bit of a negative reaction, but seems like this is par for the course and part of business.
Thank you so much for that, Anisha, for getting us that crucial update when it comes to the corporate rejig coming in at HCL Tech. We're moving on. As per the Information and Broadcasting and the IT Minister, Ashwini Vaishnav, the rules for the Digital Personal Data Protection Act or DPDP Act are expected within a month. But what does this bill exactly entail? What does it mean for consumers? Sumita is here with more details. Sumita?
Rules for the Digital Personal Data Protection Act are expected within a month, said Union IT and INB Minister Ashwini Vaishnav. He also stated and confirmed that the framework of DPDP Act is now complete with the workflow, which includes how to file complaints, taking up appeals and other details. Remember, the Act was passed by Parliament nearly a year ago. However, India's first legislation, which brings safeguards to prevent personal data breaches, has not yet been implemented, as many provisions require additional clauses, rules, and of course consultations with the industry. The DPDP Act focuses and it lays down a framework to define personal data. It gives user consent around erasure of data. There are stringent obligations for data fiduciaries as well. There are grounds for processing of personal data and how it should be processed in mines. There are norms for data localization and how data will be used in case it has to be used outside the borders of India. In fact, it also allows for a data protection board to be formed and an alternate dispute resolution mechanism to reduce dependence on courts so that these issues can be resolved by that alternate resolution, a dispute resolution mechanism. It also allows for the formation of an independent data protection board, and most importantly, the DPDP Act provides specialized protections for children and persons with disabilities. In fact, the Act defines as a child as somebody who's below the age of 18, and Section 9 of the Act actually mandates that such children will have to be verified and parental consent will be required before processing the data of a minor. So an act that's pro-privacy and defines that only under privacy law provisions is certainly one to watch out for.
All right, thanks, Samita. Definitely one to watch out for, and we'll be watching out for it as well. Thank you so much for getting us those updates. Moving on then, Anfin Singapore Holdings is looking to sell 1.5% stake in Zomato in a block deal valued at $408 million or over 3,400 crore rupees. Now, the shares will be sold at a floor price of 251.68 rupees per share at a discount of 4% to Monday's closing price as well. Winnie is standing by with more details. Winnie, tell us a little more about this block deal then.
Absolutely, you've highlighted the main details. 3,423 crores is what the block deal size is. Floor price 251 rupees is the anticipated. Is going to be 1.5% stake sale that Anfin will be making in Zomato. They currently were holding around 4.3% stake in Zomato. The last time they sold stake was somewhere in March 2024, which was around 2,826 crore rupees stake, which they had sold as well. So yes, keeping an eye out on Zomato today. Anfin surely is the one that will be selling stake today, and post the stake sale, they will be holding 2.7% stake.
All right, thank you so much for that, Vinny. Definitely, Zomato is a counter to watch out for, at least in opening trade today. But on that note, we slip into a break on a market cafe. But here's a quick note for all of our viewers, because quick commerce market could overtake the food delivery market. That's the word coming in from Swiggy's food marketplace CEO Rohit Kumar in an exclusive conversation with ET Now. He explains the rationale for that. Listen in and stay tuned for that exclusive interview that will be played through the course of the day.
There could be a scenario that quick commerce overtakes food, and there could be a scenario where food gets a step jump few years later as penetration levels increase and it becomes way larger. And it has happened in markets. So for example, if you look at the US market, food or restaurant sales actually crossed grocery in 2015. In India, grocery is a way bigger market than food services today. So it is very much possible, and it is very much possible that both keep pace at some point. I think food is a very large category play, and there is a lot to be discovered, done on food, and that's something I'm a big passionate believer in. Quick commerce is extremely exciting. I think we are seeing unprecedented levels of consumer adoption. In the spirit of experimentation, in the spirit of innovation, you have a willing ecosystem across to come and partner. And I'm not just talking new age brands, I'm talking practically every consumer brand out there which exists is thinking about quick commerce, talking to us about it. So you'll see a range explored, but the core has to be also great. And we are insanely focused on making sure that we're doing a great job in our core, as well as expanding categories as we speak. And we're practically adding like a category a day.
Welcome back. You're watching Market Cafe on ET Now, and let's shift focus to the stocks that are making headlines, are likely to move on back of that. We have Ria standing by for all of that. Ria, over to you. Good morning.
Yes, good morning. So there are a lot of stocks in news today. First up is Poly Medicure, which has launched a QIP at the floor price of rupees 1,880.69 per share, which is an estimated discount of 11.5% to the CMP of rupees 2,126, and the estimated size for the QIP is rupees 1,000 crores. We also have Suraj Estate, for which the board has approved a fundraise of rupees 400 crores through the issuance of 56 lakh shares on a preferential basis through a private placement at rupees 714 per share, and they've also approved a fundraise of rupees 99.75 crores through the issuance of 13.3 lakh warrants at a price of rupees 750 per warrant. On Tata Consumers, also the rights issue for the amount of rupees 2,997 crores closed yesterday. Also for high-tech steel pipes, they've approved a fundraise of rupees 600 crores. And lastly, on Tata Motors and Tata Motors DVR, they've set September 1st as the record date for determining the shareholders who will be eligible for the DVR share swap. And here it is important to note that the arbitrage opportunity is less than 2%.
Thanks, Ria, for that update coming in. So there you have it. Those are the stocks that you should keep on your radar bright and early this morning. Let's move on. Get a little sector specific then, and banks as a sector continue to reel under pressure for the month of August so far, while HDFC Bank and Federal Bank happen to be the only two private sector banks to hold on to the green as well. All major PSU banks are seeing a decline coming in. Gaurav is standing by with more updates on how you can just sort of decode the space and what is really happening in this space. Over to you, Gaurav.
Performance for the key banking name has not been actually strong for the month of August. In fact, when we talk about August, we have already got HDFC Bank and Federal Bank who are trading in green, and other than that, the other banking names are actually trading in red. But when we talk about Nifty PSU sector, specifically in banking, we are seeing this index down almost by 6%. In fact, we have got SBI, PNB, Bank of India who are trading almost lower than 7% each, and we have Union Bank trading almost lower by 11% in the month itself. But what are the reasons? So first, let's talk about the cost of deposits. We have already seen the deposit cost increasing by PSU banks despite the comfortable CD ratios that we have seen. We have got Bank of Baroda, Canara Bank, Union Bank actually increasing this deposit rate almost by 5 basis points for 6 and 12 months tenure, and we have also got SBI Bank who has actually increased its deposits rate almost by 10 basis points for the same tenure. Now this impact is not going to be immediately in terms of net interest margin, at least in the next quarter, but this actually shows some kind of competitive intensity which is rising, specifically in PSU Bank as well, and in the long term this will create some impact on net interest margin. The next one is that credit cost, which is likely to normalize. We have already seen this trend in the private sector banks, and public sector banks are likely to follow as per analysts. And lastly, when we talk about some bank specific issues, we have already seen SBI and PNB Bank facing some issues with the Karnataka Bank, which creates questions around the delinquencies. We have already got RBI who actually imposed penalty on Union Bank of India for non-compliance. So these issues are already there. Lastly, when we talk about valuations, now these banks are actually returning to its 1-year average price to book ratio, because now analysts believe that there are no specific triggers when we talk about target price hikes in the coming days, and there are some industry-wide overhangs as well, like regulatory changes in the ECL norm, which are specifically going to impact the public sector banks, and recent LCR requirements as well. So definitely watching out on public sector banks specifically because of these issues which are arising, and specifically in terms of valuation, now that these banks are hovering somewhere around 1-year average of its price to book value.
That, Gaurav, definitely all eyes on the PSU banking sector. But apart from the PSU banks, we also need to keep an eye out on the cement sector, because cement channel checks are suggesting that the companies have gone ahead and announced a price hike across most regions, and the hikes will be effective from this week itself. Ashesha is here to give us more details. Ashesha, you track the sector very closely and looks like another price hike.
Well, yes, Antique Cement channel checks suggest that cement companies have announced price hikes to the tune of 10 to 20 rupees per bag. This will be with effect from this week across most regions in India. In fact, now that monsoon is behind us, channel checks also suggest that price hikes are expected to continue up until mid-November this year. Let's also see how cement prices have fared on a quarter-on-quarter and year-on-year basis. Now, despite the price hikes that have been announced, cement prices are lower by about 2 to 3% on a sequential basis and 6 to 7% on a year-on-year basis. Industry volumes, meanwhile, continue to remain flat in Q2 so far. Now, remember, despite the price hikes, absorption will be the key, because cement prices had been increased last year as well in the month of October by about 30 to 40 rupees per bag, but they were not sustainable, and most of it had to be rolled back between November and April this year. So the absorption and sustainability of cement price hikes will be crucial this time around. As far as costs are concerned, analysts say that costs have come down, fuel costs have come down, and apart from this, companies are also focusing on lowering their costs by about 100 to 530 rupees per ton over the next 3 to 4 years. So most companies are focusing on reducing their cost over the medium to long term. But for now, looks like we are seeing some green shoots as far as cement pricing is concerned, a positive for the cement sector.
All right, thanks Ashesha for that update coming in. So there you have it. That is what cement channel checks are pointing to. Let's move on then, and Ansh is standing by for the futures and options roundup. Ansh?
Let's start with what FIs did in the previous session. So in long position, we are seeing that they have covered some long positions. They have added some short position as well, due to which the total long position is around 50%. And this is the 7th session that we are seeing the FI total long hovering around this 50%, indicating they don't have any strong view, any strong trend in the market currently. Now, if we talk about Nifty, then Nifty has been advancing for 3rd consecutive session, which is a bit of positive sign. Whereas on option front, we are seeing some call writing happening at 24,600, indicating resistance around this level. Now, if we talk about Nifty Bank, then Nifty Bank actually took resistance from around that channel resistance of 50,700. This is the level which we have been mentioning from last few sessions, indicating a neutral stance in the market. Nifty Bank needs to come out of this range of 50,700 to 49,700 to catch a particular trend, either on upside or on downside. Now, if we talk about index future, we are seeing open interest going up by 2%, indicating mild short build-up, which is a bit of cautious signal for Nifty Bank. Whereas if we talk about few F&O stocks that are in focus, then we are seeing significant long build-up happening in Birlasoft, National Aluminium, Glenmark Pharma, where short build-up for M&M, PI Industry and Max Financial. So keep an eye on the stocks.
Absolutely. Thank you so much for that, Ansh, for getting us the F&O snapshot that we need to watch out for. But definitely Zomato, you have to watch out for, because it looks like Anfin has gone ahead and upsized the block deal. But with that, we're totally out of time on this edition of Market Cafe. So goodbye from Shriyansi, myself, and the team that put the show together.
If you like this video, then like, share and subscribe to ET Now.